starts.
Good evening to all. Today we are going to witness the volatility of the market, share market, and we know that the present scenario, many of the younger members, especially as I am the SICASA chairman, I am interacting with the students. So all of them are very much interested to know about how to start the or enter into the market and share market, and how they can do or in a proper way or in a good way. They are so much interested on regarding this kind of matters as well as the technology matters. When we are planning the programs like income tax or GST, the students are reluctant to come for the program. Instead of they are asking, what is sir, what about the startups? What about the marketing, share marketing activity or analysis of data analysis, technology, new technology things? These are the area they would more prefer than the normal study matters like income tax, GST or company law like that. So I am sure that our expert Narayanan sir, he is here. So we can discuss the, recently around 2-3 weeks, the market is very low. Every day the market is diminishing because of the inflation, so many things. And all the where some of the places war is going on, and the market of the US market is also that what you call increasing trend, something in the cost. So the why or how we can invest in the market or enter into the market in proper way, and whenever generally we know that we thinking that whenever the market is low we can purchase, and whenever the market go we can sell. This is generally the people know, but when we are going deep into the market study, there are so many activities or so many hidden items in that. So we can expect that Narayanan sir will elaborate in detail, and we can complete or think about the questions, or we can ask the questions, clear the doubts with so much experienced person. Before that, going to that, I will just introduce Narayanan sir. He is a Bachelor of Arts in Economics and our fellow associate member of the institute, and having an experience of 2 decades in industrial experience. He was the CEO of a large leather group company in Chennai, and the past president of Tamil Nadu Investors Association for 15 years, past president of IFA Galaxy Group of Financial Advisors for 3 years, and a publisher and editor of Tamil Nadu Investors Association Investors Digest during the last 15 years, and over 3 decades of experience in capital market. So the experience, vast experience person like him, we will definitely expect that all of our doubts and issues relating to the market can be cleared well. And he is also an author of How to Invest Right and Prosper. Sir, I am from Pichur. Here also one of our famous chartered accountant, Mr. Narayanan, is there. He is an expert in whenever investor awareness program we are conducting in any of the branches in Kerala, definitely we will call him, because he was also very expert in market activity. He is not a practicing person. He is a business person. Earlier he was completely in market. After that he sold that company, and now he is doing the pharma business. So even then he is also written a books relating to how to start the investment, what are the issues in the market. So I hope that like that you will be also very good person for today's interaction. And his present position is investment coach and trainer, financial planner for individual trust, HNI and corporates, trainer for investor education, invited speaker for financial literacy program and capital market seminar in schools, colleges or CA Institute and other forums. And sir is special training in enhancing the role of directors in corporate governance, discussion on compliances, interpretation of balance sheet items. And he served as a trustee member in Investor Protection Fund, served as a member Committee of Investor Education Protection Fund, Government of India, Ministry of Law and Justice and Department of Company Affairs for 2 years, served as a member SEBI Investor Protection Fund. Over a decade, served as a trustee Investor Protection Fund, National Stock Exchange, Mumbai. Served as a trustee Investor Protection Fund, Madras Stock Exchange. Have also served in many committees constituted by SEBI. They like Primary Market Advisory Committee, Corporate Governance Committee under Kumaramangalam Birla on Corporate Governance, Satyanarayana Murthy on Corporate Governance. Then Takeover Committee under Light Achudan. Then also served in other SEBI high-powered committees. Have addressed more than 900 financial literacy and investor program across the country, and member LIC Zonal Advisory Board, South India. Over 30 years of capital market experience, and done work on valuation and helped in some companies as well as for merger and acquisition. Very elaborate biodata. So I just some of the area I skipped around 3-4 pages for the biodata. So I hope that, sir, with your vast experience and expertise in the market, we can discuss about the volatility of the market in the capital market. And I am sure that all of the members present here definitely have got a good knowledge, and they will clear their doubt in the marketing or why it is happened, the volatility, where, when, in which time it is good time to invest, and took the profit or make the profit on that without losing our money. So with these few words, I welcome, sir, for your expertization. The floor is open to you, sir. Thank you.
Thank you, Mr. Thiessen, sir. Thank you very much for your good words. Good evening to you, and good evening to fellow members of the Institute, students. And I thank the SIRC for giving me such a wonderful opportunity to interact once again with the members and students this evening. This is a very nice topic, as what you have said. It has evinced interest, not only for ordinary investors, but also to our own members, student members, college-going students, and everybody. Rightly so, because the last 2 years, when people are working from home, the time availability at their hand has become more, and people are able to use the technology very well, and they have the requisite resources. But only caution of word is, making money is not that easy in the market, but we need to take some precautions, do's and don'ts, and follow good ethical practices. Many people are under the impression making money is easy in the market. I cannot say yes or no, but definitely I know for sure, if you're going to fall into the wrong stocks, your entire capital can be wiped out. So we need to be cautious about it. The topic today is volatility. People are worried. When the market is going up, people are very happy. They saw their portfolio going up, 50,000 becoming 60, becoming 80, becoming 1 lakh. They thought they have done it in their life. Like you said, the market has started correction, but now they are seeing the portfolio coming down. So they don't know what to do. So they are running helter-skelter, not knowing what to do. We need to understand equity very well before we try to invest. I always tell people, equity as an asset class should be understood very well. It is not that all the money I have, I can put in equity and say I'm going to become a rich man overnight. This is not a place where you can quickly become rich. Our objective is to park money to get a decent return, which is little higher than inflation. You said inflation is hitting us very hard. Yes, not only in India, USA, European countries, everywhere inflation is hitting. So what to do? If I put my money in bank deposit, State Bank of India, They are ready to take my deposit at 5.75%. Sometimes they may say, I'll give you 6% also for a senior citizen. But is that enough? When my inflation is 6, the answer is no. And people seems to be happy sometimes because they say, at least my principal is safe. The other day, one gentleman walked into my office and said, I have parked 25 lakhs in State Bank of India, fixed deposit for 6 years. We're very proud. I asked him what interest rate. He said 5.75 or 5.8. He was paying 30% tax. He's in the highest possible bracket. I asked him, what are you going to get ultimately? No, sir, I'll get 4.3% interest apart from my principal back after 6 years. Is it a good investment? Wise investment? Is that the only method we have? All we will see today. Because people are under the impression safety is important. Yes, safety is paramount. I'll tell you 3 principles of investments. One is safety. Then you must also look at liquidity. When I want money, I must be able to take back the money. I can't put all the money in a land and say, I parked 1 crore in land. What can I do in case of need? I can't sell the land. So liquidity is absent there. So safety is paramount. I can't park all the money in my bank. Liquidity I need, so I can't park all the money in land. And I don't want to take any risk, so I don't go to equity. So where do I go? So safety, liquidity, returns, all these things have to be measured and ultimately invested. Chartered accountants have got a greater role to play in this. I always tell auditors that you have a greater role because the clients look upon us to advise them, to tell them what to do. We need not tell them, please buy this share or sell that share, but we should tell them what is absolutely required. We need to caution them. We should tell them what is do's and don'ts. Then they will, because they look auditors as their God. So we should be at least, tell them what to do and what not to do. So I have a small presentation also to make. I will share my screen and I will start with that. And we will take questions, any number of questions. I'll give you about 30 minutes or whatever time you want. There is no problem. All the questions can be answered. I have no issue at all in answering you. And in case you feel after 45 minutes or 1 hour, you want to stop it, you can stop it also. At that time also, we can take the questions. I have no issue on that. Just tell me whether you're able to see the screen.
Yes, sir, it is
visible, sir. Visible, sir, please.
Right. So the topic is how to invest right in a volatile market.
Sir, 1 second, sir. 1 second, excuse me. Sir, I am leaving this meeting because I have to start my train to Chennai for a CA celebration tomorrow. So I am just leaving. I hope that all of them will be enlightened with your good presentation. So sorry for the not able to attend fully because 6:30 is my train. And I wish in advance all of you a happy CA day. Thank you.
Thank you. So this is a very important slide for all of you. If you read this, you will know no one gets a sudden rise, not even the sun. It takes time to reach the peak of success. Just keep efforts going and be positive. What does it mean? It means you can't become rich overnight. It takes time. So understand that very well. So we have few topics today. I'm giving you a slide introduction. I've already given you. Some more I'll give you. And how is the market environment, I'll tell you. And what are the learnings we have done from the past? That is very, very important. And what we should do going forward. And what are the strategies in a volatile market? This is what is important today. What I should do today, whether I should put money, if I should put money, where to put money? What are the strategies I have got? Will the market be volatile or market will be steady? And then we will find out ourselves how things are. But such a position, did we see in the past? If you look at it here, why invest during bad time is good? See here, 9 January 2008. How is the market down? From the level of 20,870, it came down to 8,160. And then it went to 21,000 in November 2010. So 1 year down 61 and 157% up in the second year. Then March 15, 29,449 came down by 22%, went up by 58%. 41,000, 15th February 2020, Corona beginning, came down by 37% to 25,981. Now it is up to 52,155 or whatever it is, 100% up. What does it indicate? When market corrects, automatically, if you give time to adjust, it will give you a steady and extraordinary return following year. But are we able to get that? Majority of them are not able to get it because investors are impatient, and most of the time they think market will correct and wipe out your capital. You always have a fear that my capital get eroded. We don't have any issue in this. We always feel that bad time will continue because if you look at the television channels, if you read any of the articles in the newspapers, everybody will put negative news and they will talk all kinds of wrong things. Nobody will tell us this is a time to invest. If you ask 10 people, they'll say market is very bad. Inflation is extremely bad. The war situation is very, very bad. So what do? You should not invest. Put all the money in a bank deposit and keep quiet. They may say that. Maybe they are right, I don't know. But why such negativity in the market? Because only 4 to 5% of the people are investing in the stock market. The rest 95% are common traders. Look at the last 2 months. The first week of May, the correction was significant in Nifty. Forget July. Tomorrow is July 1st. 11% was hammered out in Nifty. Nifty consists of 50 good quality stocks, out of which you see bank and media, wherever you talk about. IT got hammered out by 22%. You mean to say Infosys and TCS are bad companies? No, but the run-up of Infosys, TCS, HCL, or any other stocks of IT were so high that it corrected significantly. So what is the first learning we have to keep in mind? When the market run-up is very, very fast, when the run-up of appreciation is extraordinary, we must keep quiet from those sectors altogether. How do we do that? When Infosys is appreciated 50%, 60%, 70%, best is to avoid. Don't buy that share. Book the profits there. Somebody will say, don't book it, sir. It will go up by another 100%. Doesn't matter. This is the first lesson you must do. The second, look around. People say some sectors are not doing well. Some sectors have got problems. Then you must look at those kind of sectors where you can go and catch. That is what is required. Before that, I will take you to the simple fundamental thing, how to allocate your money. In a volatile market or in a good time, this asset allocation will help you. Fixed income, gold, real estate, and equities. World over, remember, world over, only there are 4 possibilities for you to invest money in the market. Fixed income means your post office deposit, your PPF, your bank deposits, any deposit you take, your corporate deposits, everything is considered as fixed income, where my return is fixed. Is it required? Yes, of course it is required. I have 10 lakhs of rupees today. I need 8 lakhs next year for payment of tuition fees to my daughter. Can I put it in equity? No. I need to protect the capital. What should I do? I can put it in the bank deposits, whether it is 5% or 6% or 4%, doesn't matter to me. What is important? Capital preservation. So what kind of money goes into fixed income? The money which is required the next 1, 2, 3 years. Up to 3 years, if money is required, please block it in fixed income. There is always a saying, the fixed income can also look at debt funds of mutual fund. Yes, little bit of risk is always associated, but good funds are always there. I'll come to that separately. So fixed income, understand, it gives you fixed return. So some allocation is required. I want to park some money for my emergency. Next year, I don't know, my health condition may deteriorate. I need some money. What will I do? Keep some money in bank deposits. Nothing wrong in that. 4 months of my expenses. My expenses every month is 50,000. I'll put 2 lakhs there in bank deposits. No harm. Okay. Having done one part of it, I go to the next part, gold. You are all expert in gold. There is not a single soul in India who doesn't understand gold. Everybody wants gold. Somebody walks into my office and asks me, sir, I have come here to buy some gold. I always ask them, what is the idea of buying this gold? Your daughter is studying 4th standard. When one husband and wife came and met me, no, sir, she is studying now 4th standard. She's 10 years old. But when she becomes 20 years, she is ready for marriage. Or 21 years, she will be ready for marriage. And I need to have good ornaments for her. So after your meeting, I'm going there to buy something. Because behind my office, there are n number of gold jewelry shops. Ask them, if the purpose of buying this gold is for your daughter's marriage after 10, 11 years, why are you in a hurry to buy it today? Why not after 10 years? No, sir, gold price will go up, shoot up. I see. The gold price will shoot up, you were saying. What is the return gold is giving normally? I asked him. He said, multiple times, sir. My grandfather's period now it's gone up from 100 rupees to 40,000 rupees. Have you got a percentage of return? Have you understood that return? What is bank deposit giving? No, sir, that is giving only 5%, 5.5%. Then that is giving 5.5%. How much is the gold giving? You can't tell me my grandfather purchased, grandmother purchased. What is the exact return you are getting from the gold? He or she didn't have answer. And how do you say gold is a great commodity to buy? No, sir, it's a great commodity, sir. You cannot say you can challenge anywhere. I said you did not satisfy me, but I just wanted to check whether you are able to understand this better. So I am asking you a simple question, whether gold is delivering the requisite return. Nothing was forthcoming. Then I explained to him 2 things. One, gold as such is not a bad commodity, but we have 2 methods of investing in gold. One, what is required for our own consumption, like our bangle or chain or ring or whatever you want, they're all for consumption. It is not an investment for you at all. Let us not confuse consumption and investment. I buy a car and keep it in my house for going around. It's a consumption product. It is not an investment at all. I just go around. So gold for consumption, great. You have invested money, use it very well. But no, don't come and tell me now that my daughter's marriage is after 12 years, so I'm investing for that. Then it becomes not a good sign. So what do I do, he asked. And I told him, please buy gold other than physical method. He didn't understand much. I explained to him, the gold can be invested in paper form. He asked me how. Then I had to explain to him, digital gold, gold ETF, gold mutual fund, or sovereign gold bond. There are 4 different methods available for you to invest in gold. Sir, what do I do with this paper gold, sir? How do I encash it? I said, if the gold price today is 40,000, and after 10 years, it becomes 60,000. The paper gold can be sold for 60,000. And at that time, whatever jewelry your daughter wants, she can go and buy it. Why do you buy an outdated, not in fashion gold jewelry today and keep it in the locker and pay the rent and ultimately not in favor of your daughter? He said, I'll come tomorrow, and he went back, came again. He asked again number of questions. Then he realized what I made, little bit of sense. Then he said, I'll buy 50-50, sir. I will not buy 100% of physical gold because you are saying so much. I said, for my sake, don't change. But if you're convinced, you do it. Then he ultimately purchased 100% sovereign gold bond and went. Because I explained to him, if you're going to put 25 lakhs in sovereign gold bond today, whenever the issue was coming up, 3-4 times a year it comes. It is issued by Reserve Bank of India, backed by Government of India. It gives you 2.5% interest. There is no problem of safety. And it can be encashed after 8 years. There is no capital gain. What more you want? So please be very clear. Gold consumption, any number you can buy. For investments, look at only paper gold. Don't look at physical gold. By buying physical gold, they are making the shop owners rich and not you. And the average return of gold is 7.5% per year. If you want to compare gold return with fixed income today is about 5.5, 6. This gives you 7.5, 7.75, just about the inflation. It's not a great asset and productive asset, but very difficult to change the mentality of the people. It is got a good liking for the people because the dollar is depreciating. The price is determined at New York Stock Exchange. You are seeing gold appreciating in India. Tomorrow we find a methodology of fixing the rate ourselves. You will not find return at all. Whole of 21, we did not get any return. 22, when the war started, the return has started coming. So average return. 1 year it will give negative return, another year -10, then +25. Don't go by all that. Average return will be 7.5%. Now comes to real estate. A lot of people are mad after real estate. They come to me and say, sir, I got one house here in OMR Road, one in Guduvancheri, sir, and one more I'm going to buy in Coimbatore where I'm going to settle down. So when I'm asking you a question, how much return you're getting from the house, you're giving it on house, they have no clue. I asked the gentleman at OMR Road, you are saying you invested 1 crore. And how much return you're getting as rent? About 25,000 per month. Paying property tax, paying whatever the landlord has to provide for maintenance and all that. You're getting 3 lakhs a year as rental receipt, which yields to about 3%. Lifelong, you keep paying EMI. Are we concluding real estate is bad? No. Real estate is very good. All the boxes you have to tick. Fixed income is good, gold is good, real estate is good, equity is good. But we must be moderation. We must have moderation in all the four. So what to do with real estate? I said, one good house to live is more than enough for you. Why are you building a house, a second house for somebody else to come and stay there? That's the point you must ask. Don't ask questions about giving it on rent and staying comfortable. Never. You find it difficult to find a tenant today. So one good house is enough for you to live, and don't buy the house when you join a company. That's important. And finally, we come to equities. Equity as an asset class always tests the people with the patience. In 1990, when I was addressing the investor community, they will ask me, sir, whether the market will go up or down. Harshit Mehta period was coming in 91, 92. When I used to have meetings in Tamil Nadu Investor Association, up to 130 people used to stand and wanting to know what share Harshit Mehta was buying. And once he came to Chennai, and a lot of rush to see where he is going, which company is going. People are ready to spend money to go behind him, to check where he is doing. This is the craze with which they were working. The only reason I could find is people think making money is very, very easy in equities. They think equity market will only give you profits and you will become rich quickly. The understanding is wrong because it can give you negative returns. No wonder only 4% of the people are investing in the equity market today. So what do we do as an investor? In 1990, I told you the same question came. In 2000, when the market crashed again, people are asking me, sir, the market will go up or down? 2008, the global crash came. Again, people are asking, what to do, sir, now the market has cracked? One thing you must remember, when the market abnormally corrects, it will bounce back at the earliest. We have seen in the COVID time, the market corrected in 2020 March, it corrected back again. There are two things important for market valuation. One, the company's growth is more important than anything else. The company has to perform. It means the sales have to keep going up year on year, month on month, quarter on quarter. Second, the company should be profitable. The company's profits ultimately becomes earnings per share. That determines your share valuation. Share valuation doesn't happen just like that. It is not a manipulated figure many a times. But if you're not careful, you'll lose money there. The market is bullish. Lot of initial public offerings will come. A lot of people ask me, sir, primary market, is it safe? The answer is, nothing is safe in investing. Everything has got risk. It will be a measured risk. The other day, one person walked into my office and said, I got 20 lakhs to invest, sir. Where can I put money so that I'll get 15% immediately? I said, what is the duration you're looking at? And what asset class you want? I have the chart. Then you want to put in fixed income, sir? Sir, fixed income, how much you'll get? 5%. No. This 5% is no use. Gold. Gold, I got enough and more, sir. My lockers are full. Real estate, I got 3-4 properties. Are you ready to put in equity? Yes, sir. That's why I came and meeting you. They say market will be volatile, but ultimately I'll get a great return. One of my friend was working from home. He didn't know anything. He got 35% profit last year. He's very, very happy. And he told me, just leave the job and join his own company, and he will make you rich. Is it correct, sir? 20 lakhs. I'm planning to go and give it to you. Said, you have any understanding of the market? Do you know anything on fundamental of the company? Sir, I don't know anything, sir, excepting that I need 15% return, sir. I am not happy with the return from other asset classes. I don't read the paper and all that. I want 15% fixed return. These are the type of investors we are having in India. And these are all retail investors. Blind faith. They're ready to listen to people. But they throw caution to the wind and blame the government. They blame the SEBI. They blame auditors. They blame everybody else when they lose money. I told him, market will never give you a guaranteed return. It can never give you assured return. Market may give you 10 to 12% return, provided you take a 6 years call. No, I cannot take 6 years, 7 years and all. I am already 62 years old, sir. What are you saying? I want money after 1 year. I said the best will be to go to State Bank of India and put your money for a year and get 5 or 5.5. That is the best. Sir, I got a lot of people to advise me, sir. Since somebody told me that you are giving correct advice, I thought I'll come to you. Said, my correct advice will be to put the money in State Bank of India if it is for a period of 1 year. I don't know what he did. He went away. I think he met a broker. And broker felt that he should indulge in derivative trading. He told him that this 20 lakhs can be made into at least 40 lakhs. So he signed up all the papers, gave power of attorney, everything. Last I heard from him when I met him casually, he said he lost all the money. And he had to borrow 2 lakhs to pay the broker his dues. Again, he tried to meet me. I said, what can I help you now? Because, no, I won't recover the money back, sir. I said, I have no mechanism to recover money and all. I'm not a retriever of money, or, I'm not a person who, like a bank, who can go behind people and collect money. It's not possible. Why I'm saying this is, understand the risk while investing. Understand what kind of risk you can take. Understand how long you will wait when you invest money. This is the crux of the issue. Break into 3 parts. Short term, up to 3 years. Put it in bank deposits or liquid fund. Medium term, 3 to 5 years. Put it in some kind of hybrid model. Anything above 5 years, look at equity. If your time frame is less than 5 years, don't even look at equity. This is the first mantra I can tell you. But people are not ready to listen to all this. Sir, you are giving all wrong advices. I know a friend of mine who was minted money in 6 months' time. So I'll go to him. I said, yes, please carry on. There'll always be exceptions to the rule. And if you're going to pick and choose the exceptions, then luck has to play with you. I am telling again, that day trading in shares, 99% are losers. 1% is a winner. If you tell me that 1% and show me that man and say he's the winner, I can't take that as a sampling. 99% of the people are losers. Total gambling, speculation, not understanding is derivative market. Please don't do that at all. I think few things I covered here, how to tackle the market volatility, risk before investing. And don't get panic. I buy 10 shares of Infosys today at 1,500 rupees. I've invested 15,000 rupees. Tomorrow, there is a bad news that it goes to 1,400. Don't get panic. You bought the best of the companies in IT in India. It is functioning for the last 30 years. You mean to say Infosys can wind up and go away? Never. More than 1 lakh, 1.5 lakh people are employed there. On the other hand, if you have bought a tiny company and invested 1 lakh and it becomes 80,000, yes, it's a matter of concern. Never sell just because there is a market correction one day. Short-term volatility will always be there. I always tell people, if you are ready to invest for 5 years or 6 years or 7 years, you must also, the second point is, ready to lose 20%. I invest 1 lakh. Even if it becomes 80,000, you must be able to withstand that pressure. Are you able to withstand? Oh, sir, 20% is too much. Let me at least take out 80,000 because somebody told me, my uncle told me that it will become 50,000. Everybody will have an uncle. Everybody will have an auntie. Everybody will have a neighbor. Everybody will have a friend. Can I keep on talking to everybody on the subject other than the expert? That's where we go do mistakes. Do we go and give the file to each and every person or going to the auditor to file the IT return? We have to be careful whom we are dealing with. If you go to the expert and talk to the correct person, you need not worry at all. Then a lot of people ask me, what is this financial plan and goal and all that services and all. I don't believe in all this. I was really surprised when a young boy, about 20 years, he came and met me about a month back and said, Uncle, I want to go to Istanbul after 5 years. I was told that it will cost me something close to about 2 lakhs. I don't know whether it is correct or not. Maybe 5 years time, 2 lakhs is required. What do I do? I asked him, what salary are you getting now? 30,000. And it may go to 40,000 in another 2-3 years time. I asked him how much you can save from that. He said, I'm staying with my parents and I can save 10 to 15,000 easily in that. If you expect me to save 20 also, I can do it. I said 15,000 is good enough right now. Balance we'll talk later, and put 5,000 separately in an account so that 5 years you will invest 3 lakhs of rupees. And even at 10 to 11%, you should be able to get closer to about 6 lakhs. 5.5 years time. He didn't understand that at all. I told him, at your age, assuming, I told him, assuming you're a 25-year-old boy, if you're investing 5,000 rupees today on a regular basis for the next 30 years, at 55 years, you can get 1.5 crores when you retire. It's the power of compounding. Is it impossible? How? Even my father doesn't have so much of money, he said. I don't know what he has done. What are his plans? I don't know. Where he invested, I don't know. No, sir, no. My father invests only in recurring deposit in post office or bank. That much I know. Why? Because he doesn't understand equity. And why did you come here? No, somebody told me that you are advising on equity and you're giving lectures on equity. So I came to you. Good, you have come to the right place. Hear me out again. Start putting 5,000 for your retirement benefit of 1.5 crores. After 30 years, you will get that. Can you give it in writing? He asked me to show it to my father. I said, I cannot guarantee anything. Nobody will guarantee. Nobody will assure you returns, but it will happen. That's the beauty of the market. How you ask me? 1979, when Sensex started 100, did anybody believe it can go to 52,000 today? In 43 years? Do you know what kind of return it has given you now? 100 becoming 52,000. Means what? 520 times it has grown. Anything can grow to 520 times, 500 times. Can anything grow like this in 40 years? Does it mean 16% compounding return year on year? And still you are questioning whether equity can give you returns? And still you are questioning whether volatility will kill you? That's a question we have to ask ourselves. He didn't understand. He went back. I was surprised when he came back after 3 days with his father, mother, sister, everybody. Father asked me again, I understand you have told him some tricks to make money. I said, I am not a magician. I told him the power of compounding works for you. That's how this amount can be invested. So he asked me again how this power of compounding can help him out. Explain to him. Anything you invest in a disciplined way, in a recurring, like a recurring deposit month on month, in an equity, automatically you stand to gain. 1979 index has become 52,000 today. So you ask me how much it can go, where it will stop. I don't know. If you had asked me in 1979, I didn't know that it will become 52,000. But one thing I can tell you, this can go up to 1 lakh. It can even go to 1.5 lakhs. I don't know. Whether it will go, yeah, it will go. When, I don't know. But one point I am clear. The next 25 years is going to be robust in India. It's going to be much better than what it was last 25 years. What does it mean? It means the market will deliver much better return the next 25 years. So he was fully convinced about it. Told his son to sign up for 15,000 in 3 separate mutual fund schemes. I was very, very happy and delighted. All youngsters participating in, doing these kind of things. So you must have a financial plan. Look for long term. Again, I am saying the same story. 5-year plus, long term. Have patience. You are not going to make any mistake. If you're going to, tomorrow morning, somebody will say, buy this X company at 100 rupees, it will become 200. It's a hot tip. May work, may not work. When should I start my investments? It should be as soon as possible. What does it indicate? The day you get your pay slip, that is the starting point. Should I wait for 6 months, 1 year? No. Immediately you must start your investments. First salary check. That is the starting point. And separate emotions, no emotions attached to this. Fundamental analysis is important. That's why I'm giving an example of Infosys. Good company, good corporate governance, good profitability, growth, everything is there. Why do we say it's good? Well-managed company, no irregularities. Auditors understand this much better than anybody else. And investors depend on auditors. We have a role to play much more than anybody else. Diversion of money to subsidiary company, sister company, nothing is there in that. All these things are not. I always tell people, if you find a company having multiple subsidiary companies, sister companies, don't even invest in that. They may be the best, but don't look at it because we don't know. Interrelated transaction, this, that. Go for plain vanilla companies. That is why we say invest smartly. All these things are important. And then they say mutual fund proved to be the best. A lot of questions come about. There are about 44 mutual fund houses in India right now. Do you know that? 44 mutual fund houses are there. They're well managed, well regulated. Disclosure standards are good and professionally managed. These are all, you can always read it anywhere. There is no guarantee of returns. Whether it is SIP or STP or whatever model you follow, mutual fund tend to have the fluctuations. But what is required is continuous investing from your end. Can you not invest 1,000 rupees? That is what I asked him. In one of the meetings like this, when I was addressing in Coimbatore, one taxi driver who was driving car for me, he came at the end of the meeting and told me, "Sir, I want to start 1,000 rupees per month." I was really taken aback. I asked him, "What made you to do this today?" "No, sir, I heard your lecture." So I'm talking about 7, 8 years ago. Even today he's putting that 1,000 rupees. It's a taxi driver. I have not met him after that. I told him only one thing, 20 years you have to invest. And you will get 10 lakhs at 12% return. He is aiming for 10 lakhs. He said 1,000 rupees, 10 lakhs for 20 years. This is a conviction with which he is investing money. I am not guaranteeing a return, but a habit is very, very important. If he's going to invest, his son will invest, his daughter will invest. Today, what is happening? When you go home, everybody would have lost money in Harshad Mehta scam. They'll say, equity market, don't look at it. So don't do it. Not only you have to save, but you also have to invest money. It's very important. There's a lot of difference between investing and saving. So don't. This is what again and again I'm saying. Be patient and think long term. You'll get a lot of ideas, you'll get a lot of noises, but you have to be very, very careful. You should not think. Today, what is happening in Indian market? Foreign investors are selling in the Indian market. That is why the volatility is very, very high. Can you believe? In 2008, when the market crashed 52% in India, some $8 billion was sold by FIs. Did mutual fund had money at that time? They had some 200 crore or 100 crore SIP running every month. They could not match the FIs selling. But today, do you know, $4-5 billion are sold every month by the FIs from October. Almost $40 billion or $30 billion they have sold already. But our SIP book size has become 12,000 crore per month. Can you believe it? Tomorrow you'll get the data. That means retail investors are putting money and they're trying their best to keep the market alive. I always say this is the best of the slides. FD is safe if it is 1 year investment, and it is dangerous investment if it is held for 10 years. Why I'm saying dangerous? Because it doesn't give you any protection against taxation nor against inflation. Equity is risky if it is for 1 year and completely safe if it is for held for 10 years. I am an investor since 1983. I can tell you for sure that equity is a great asset class if you're ready to wait for more than 10, 15 years. But we look for short-term gains. One doctor who is somewhat a believer in equity came with his wife. She's also a doctor. But she was not fully interested in equity because she thinks it's a high risk product. So they came and met me and said, we have invested 10 lakhs in State Bank of India in 2010. And it got matured to 14 lakhs today. And we are very, very happy about that. She was very happy. So this person, husband told me, Narayan, you have to convince her that this is no good. Just explain to her what she would have got if she had put 10 lakhs, even in an index fund in 2010. Then I saw some calculation and I could make out in 12 years' time. Normally in 10 years, you will get 3 to 4 times. And I was right, you would have got 44 lakhs. I told her, instead of 14 lakhs, you would have got 44 lakhs. 10 years, you'll get 4 times, 5 times. Some funds deliver 10 times. I'm not saying all that. I'm just saying 3.5, 4 times. But definitely FD is useless for 10 years. She was taken aback, but not at all convinced. Today, tomorrow, 50 lakhs is coming up for renewal. I thought it's better to continue in somewhere, it's safe. I get about 5% or 6% or whatever it is. And pays 30% tax and 3.5% return. And you said some inflation is 6. So what do? You lose 2.5% every year. That's all. They have started investing a little bit now. I'm not saying great, but they have started investing a little bit. What are the things we should avoid while investing? It's a very important slide for you. Unrealistic return. I am saying 10 to 12% should be a realistic return. A lot of questions come. Sir, what is this 10, 12% all that? People are expecting 20, 30, 40, 60%, sir. I am not in that group at all. I am only saying 12% consistent return, 10 years time, you will make so much of money. In fact, one gentleman came and told me, I want to save 100 crores. You are talking about 1 crore and all that. What is this, sir? How much I should invest for 1 crore, he asked me. He said, are you capable of investing 50,000 per month? Yeah, no problem. Take this check. Give me the plan. So I put him into an equity diversified fund, 50,000 per month for 10 years. Do you know the corpus is 1 crore today after 10 years? Now he has come back and says, I want 100 crores. Not difficult at all to calculate that, I say. The people, once they taste this 12% return on a consistent basis, 100 crore is not a problem. But be realistic in return. Don't ask me 20, 30. I will not change this factor of 12% at all. If you get it, it's for you. Then one more person seeing this, he asked me, sir, If I want only 50 or 60 lakhs, what should I invest? That's a question because his affordability is not 50,000 per month. And I said, if you put 30,000, you'll get about 65 lakhs. I was quite convinced about that. He started investing 30,000. Today, a lot of people are investing 30, 50, 60, 10, 20 and all that. So I think one should evaluate and put your money on a regular basis. That's the purpose of this kind of awareness program, to educate you, to make sure that you fall in the right bracket and right products. If you are not knowing your risk profile, that's very dangerous. You need to have your own risk profile. Not having a financial plan is far more dangerous. You need not be optimistic or pessimistic. When you are signing up for a loan with a bank, what are you doing? You're just signing without anything. Till retirement, you keep on paying EMI. Is it a good thing for you to keep on borrowing and paying money? Why not we take this route and invest your money in a judicious way? This is a question I ask people. He's saying, sir, IPO is the best. IPOs are marketed in a way to attract your money. We have to be extraordinarily careful. The promoters know much more than what you and I are given information. Not all companies are Infosys. Please be very careful. The corporate governance, I give topmost priority. Integrity is very important. The IPO pricing is very, very sensitive and important for you. In a bullish market, everybody will try to extract maximum pound of flesh from you. When the market falls, everything falls. We have seen in IPO how market corrects 50%, 60%, 80%. Who asked you to invest? Don't invest unless you know the company well. You must never invest money and get into trouble. Don't blame anybody. A lot of people ask me, sir, what is SEBI doing? SEBI's job is to tell you that this particular company is coming up with a proposal to issue shares to public. It is up to you to read, understand the prospectus. Then if you have money, invest. No, sir, they are charging 900 rupees premium. Why did they allow them? Yes, it is a free pricing regime today. What does it mean? Anybody can charge anything. I can sell this specs for 10,000 rupees if there are buyers. Who cares? Why did you buy for 10,000? I can buy it for 100 rupees also. So you must know what you are buying at. Nobody will give you things cheap for you. Understand that. Before parting with your check, think 100 times. Even if you don't buy it, nothing happens. But after buying, don't blame others. You have to blame yourself. So how do I take care of the volatility? Asset allocation is the best. I showed you the 4 blocks. Put money everywhere. Fixed income, gold, real estate, and equity. That is called diversification. SIP is the best. You don't, even if you have 50,000, put 50,000, 40,000. One lady CEO came and met me. She said, I got 3 lakhs of rupees income per month, but I don't have any saving. I said, where is the money going? Oh, after paying taxes, this, that, I'm paying EMI for 2 houses. I don't have anything. And now I purchased a car also. I'm paying off 80,000 a month. 80,000 a month? Yes, sir, I've just bought a Benz car so that I can go to my hometown once in a way and come back. The amount of money we are wasting in EMI needs to be controlled. We need to be extraordinarily careful while spending money on EMI. One is interest. Second is the duration. Third, the utility of the asset. So don't sign up anything. I told her. I said, you stop it. Even if you sell the car now, you lose money. What to do about it? But at least 25,000 you save now onwards, I told her. She's doing that now. Increase in awareness. I'm extremely happy that many of you are participating today's SIRC awareness program. This has to be participated every month. Since 1990, I still remember. I am a regular speaker in Tamil Nadu University Association and various other forums. Even today, I love to attend programs. Continuous learning is a must. There is no compulsion from anybody. But if you want to make money, if you want to understand things better, nothing will come free for you. You have to spend your money and efforts. Glad that CA Institute has taken a lot of efforts to make sure that awareness is created. Unless we are having proper awareness, it's extraordinarily difficult to teach our clients. Our clients look upon us, tell what to do and what not to do. These other things are very, very minor. As I always say, equity can give you 260 times, whereas nothing can come anywhere closer to that. So don't bother about it. People can say a lot of things about economy, recession and all that, but you will not bother about much about it. Economists can say from their own angle, but we should know what we are. So don't worry about anything. FII investments are tremendous. They always say, USA is the greatest of the nation to put money in India. They will pull out. Don't think they will come for charity. Imagine if they're going to come back in bringing in 20 billion in 1 year, again our market can go. So don't worry about that. Market will be like that only all the time. It should not be a cause of worry for you. You need to stay calm and you need to focus on long term if you want to create wealth. The volatility is in your mind, not anywhere else. So don't worry about all those things. This rule 72 tells you how much time it takes to double your money, or in 12 years, 15 years, 20 years. And this is a great slide. I always like this. The world is waiting for market to crash, and market is waiting for your patience to crash. How long it will take for market? There are a lot of people come and ask me, sir, you have been telling all kinds of stories, sir. Tell me now when the market will recover. Not that it's like a station master just giving a green signal and saying train starts today and market will start from tomorrow. It's not like that. Market will sense something is turning out to be green 3-4 months in advance. If March 23, the economy is going to do well, December onwards, you will get a signal. So understand that very well. Normally, I tell people these are all the mistakes done by the investors. There can be more. But one thing, overconfidence can kill you, and borrowing and investing. Never borrow, never lend. This is my principle. Borrowing and investing is dangerous. And if you're not owning equity, you are in real mess. No harm in meeting people, talking to them, taking the right advice and doing it. A lot of advantages of putting money in regulated product. Unregulated products, too many are there in the market, in Chennai market. Crypto is one. A lot of people ask me about crypto. They ask me, sir, can I not put money in crypto? I got about 5 lakhs, can I put it? Only question I ask them, is it a regulated product? No, he doesn't understand anything. Who is regulating crypto? He said, no, sir, this is all regulated by SEBI or RBI, I don't know, or finance minister, they'll say sometimes. If you don't have answer, best is to avoid that product. Crypto right now is not a regulated product. Don't even look at it. It is like your Ponzi schemes. But we love Ponzi because we get a higher rate of return. So equity markets are well regulated. Mutual fund products are well regulated by SEBI. Insurance products are regulated by IRDA. Banks are regulated by RBI. Pension products are regulated by PFRD. All these things should be known to you. So we don't have any question on all that. We must know how to manage the risk rather than saying, I don't want to take any risk. Without risk, nothing. You can just keep your cash in your pocket and go. Even then, it is risky only. Somebody will take it away. So what are the main issue before us for volatility? Somebody is selling, somebody is buying, so volatility keeps coming, hitting us. Inflation, yes, it's a cause of concern. Do you think it will continue forever? Never. It will come down at some point. If tomatoes are quoting at 100 rupees per kilo, if people are reluctant to buy it for 1 month or 2 months, price came down to 50 rupees. And it's a matter of time, it will go to 20 rupees. So we must know how to adjust to the pricing. We must know what to buy, what not to buy. The same thing holds good for shares. The share price goes up from 100 to 1000 to 2000. Just avoid it. It will come back to the normalcy. Don't chase stocks. Increase in interest rate is a normal cycle. Now it is 5.65, 6, 6.5. Maybe it will go up to 7. Then it will start falling back. India will go back to 4% 3-4 years time. So nothing to worry about. FII outflow, yes, it's a matter of concern. Every day they are selling 2,000 crore. Even today they must have sold. So it will be a matter of concern. Yes, it's a matter of concern. But they will also come back in maybe January, February in a big way. So let us have input cost hike. Yes, all commodity prices have gone up. Today somebody was telling that coal prices have gone up from 80 to 300. So the cement prices are going up because cement manufacturer requires coal. So all these are matter of concern, definitely. But don't we have anything favorable? Yes, we have a lot of things which are favorable. CapEx, people are spending money on capital expansion. Our increase in GST and direct taxes, we are all expert in that. Earning and improved profitability of the corporates, yes. Reduction in NPA in banks, fantastic reduction in NPAs. People are very, very cautious while lending. Better governance today. All these things are very, very good things. So market to be volatile, yes, it will be volatile, but you need not unduly worry about. But all these points one should keep in mind as positive things for us. Should I invest directly into equity or into mutual fund? The answer is mutual fund is better in the beginning. After gaining experience of 2 years, 3 years, get into direct equity. Don't get into direct share trading. Trading is dangerous for you. But equity mutual fund is the best asset class for you to start with. Have you seen meltdowns earlier? Yes, we have seen meltdowns. Dot-com bubble in 2000, global financial crisis in 2008, 2020 COVID scare, 40% reduction, and 2022 inflation. Can it come to 40%? Unlikely. We are almost reaching the bottom. How do we say? Because the PE is becoming attractive now. Price earning ratio was 33%, 33 in 2021 has come to 28 to 21. Maybe it will go to 18. In 2008 world global recession, it came down to 9. People are buying left and right. Sir, in SIP, when I am putting money, when the market goes up and down, should I worry? I think you need not worry, because whether you put in a small cap fund or a mid cap or a large cap fund, NAV keeps moving up. But from 2008 to 2022, I have made 8.5 times in small cap, 6 times in mid cap, 5.5 times in large cap. Have I lost money the last 14 years? Answer is no. Just read it. You're not losing money. So what does it mean? It means you're making money. Sir, you always say equity is better, but gold my grandfather has purchased. See here what grandfather could have purchased. 2012 he has purchased for 2885. Today is 5246. It has grown 1.8 times, whereas equity has grown 3.3 times. Everything is good, everything is bad, but without equity, if you think that you can invest, you are wrong. So don't do that. This is a very important slide, an interesting slide for me. I always say you're taking a bigger risk by not investing in equity. Never, never do that. Always invest in equity market. If you look for free advice, always the counter will be full. This is just an example. Mutual funds 1 to 6. I have lined up. If somebody had invested the last 20 years, 1 lakh would have become 80 lakhs, 80 times, 60 times, 40 times. No guarantee, but still. 1993, 2022, 30 years, 12%. Likely return would be better. We don't know. Why I'm saying again and again is, don't worry about the Ethereum market volatility. You do not unduly worry about it. What are the points we have to ponder now? This is a very important slide for you. Should I do day trading, sir? I told you in the beginning itself, don't do day trading. Never be overconfident. Why I'm saying that? Because if you're going to do day trading, you'll be tempted to do speculation. You will be tempted to do, get into derivatives trading, which will wipe you out. And never borrow money. What is this FOMO effect? Never chase return. Fear of losing out. Consult and take a decision. Always meet a group of people. Don't borrow and invest. Will, nomination, all are important while investing. Very important things for you, I'm saying. Our understanding of the market is more important. Our principle is very important. We must teach our youngsters very, very important things. I feel financial habits are important, like your healthy habits. We are earning money, saving money, but we need to invest money properly. It has to give you inflation plus returns. That inflation plus return can give you only in equity. Can I invest directly in equity? Either you can do directly or you can go to mutual fund. Will I get 10% return? Yes, you will get 12% also. Is it assured? No, it's not assured. But is it guaranteed? No, it's not guaranteed. Then why should I invest? Because it beats inflation. It has got a good track record. So why I should not invest money? Mutual funds are good enough for me. Can I create big corpus? Yes. I told you today 100 crores somebody wants. It's possible. You should not unduly worry about it. Then can I sell my land and put all the money in equity? No. Don't forget that square which I gave you. All are very, very important points. One should look at it. And I'm sure you'll have a lot of questions to ask. Instead of asking me to predict the market, I thought I'll put this nice slide. Those who have knowledge don't predict. Those who predict don't have knowledge. Must be some Chinese or whatever it is. Thank you very much. This is a book which I wrote mostly from my own experience, meeting the investors, how retail investors have made money, how HNI has lost money. All these things are forming part of this book, my experience. So I just wanted to thank you for your patience, and I can answer any questions now. I'll be more than happy to answer any questions. Now the forum is open. Either you can unmute and ask me a question. If you want me to see the chat, I can do that. Thank you very much.
1 minute, sir. So 1 minute, sir. I'll just enable. So participants, you can unmute yourself and you can post the questions, if any, to sir, or else you can post it in chat box, so sir will take up the questions. Now everyone is open for questions.
See, the one question I saw was how to evaluate the performance of various funds where I'm investing. This is a normal, typical question raised by most of the investors. I always tell one thing. Yes, please. Only one question I always ask is, you must look at consistency of the performance. If somebody is doing well and if the fund has done very well in the last 10 years, 12 years, 15 years, across the different cycles of bull or bear market, we can take it that that fund is likely to do better and better. So please look at consistency of the performance, the long track record of the fund manager before you invest money. Don't look at last 1 year and invest money. A lot of people make a mistake of investing. Yeah.
Oh, it's a good presentation you made, Mr. Narayanan.
Yes, please.
The question actually, it's a very common question. So you showed a very good slide, something which is coming free being crowded. And when it costs something, there is no queue at all. There is absolutely no queue. Yeah, that's nice. I understood that people go for a free advice on these investments and not ready to take the advice, paying something and understanding the reality and then go for the investment. Am I right? Or you want to say something else with that slide?
No, sir. Absolutely, you're on the dot.
Thank you.
In fact, what SEBI has done, in fact, I'll add a few more. See, SEBI says there are two methods of investing in mutual funds. One, you can invest direct, or you can invest using the regular NAVs. There are two ways of investing in mutual fund. Now, direct means there is no intermediary. Now, regular means using the help of distributor. If you go to the bank, they'll help you. He becomes a distributor. You go to any mutual fund distributor, he'll help you. So they'll charge some commission and take it out of your money. So maybe 0.75, 1%, whatever it is for the services rendered. On the other hand, there are registered investment advisors available according to SEBI. Registered with SEBI, RIA. They are called RIA. You have to pass an examination and have a license with you, which will help you, enable you to give proper advice to the investors. And you will charge, whether it is, 5,000, 10,000, like audit fees, you can charge. They put some upper cap also for that. But investors many times think it's waste of money to pay for advice. Very wrong method.
Oh, exactly.
Any professional, we have to regard him as a professional and pay for it, and then seek his advice or her advice. This is my feeling, and I think you are right.
And when we talk about the IPOs, or rather equity, it is better to go for IPO or to buy from market and wait for it to come.
Both can work sometimes. See, what happens is IPO market is very tricky. The promoter and the investment banker decides the pricing of the issue. And they come at a time when the market is normally bullish. And they give you a good presentation about the past of the company. They're not allowed to give you the future projections. So in the prospectus reading is becoming very difficult because it consists of 400, 500 pages. Now, in a hurry to capture the IPOs, people rush and collect it, and newspapers write a lot of things, sometimes good, sometimes bad, and they try to grab your money. But the integrity of the promoter, again and again, I'm saying, Infosys, because the integrity of the promoter was so good. We have seen many companies folding up in the software companies in the past in our own Chennai city. Where, where is DSQ software today or Silverline company? Where is it? Nothing. Many other companies, 4 or 5 companies are wound up. The integrity, corporate governance is a key to the success. So unless we have a good clue, better to wait for the price to stabilize, look for the right price, right valuation, and then buy it. Pay the right price. If you're going to pay higher price, then your waiting time becomes longer. So it doesn't make any sense for you. Better to buy good stocks in the secondary market when the valuations are lower. We don't tend to buy. See, the problem with us is when the market crashes, we say market will crash further down. Right? This PE of this company is only 4 now. It has come down from 40. From 400 rupees, it has come to 40 rupees. No, sir. Now they are saying market will crash further. Will it become zero? It can never become zero. The intrinsic value of the company is so good. Why not we take advantage in buying the share? This is where the advice come in, and advice helps you. So I think as an auditor, we have got a lot of role to play to convince the clients and tell them appropriately. It is their decision to buy or sell. We can give them the pros and cons.
When it comes to trading, you are saying no to day trading or trading at a space actually. You buy something, wait for a month and then trade. Which
No, now trading means I'm talking of day trading, speculative trading, including futures and option trading. That means you are not inclined towards taking delivery at all. That is called trading. Trading means you just trade, buy 100 rupees, sell it for 102, 101, 99, you book a loss. Now, if you are going to buy NTPC 100, ready to wait for 120 rupees, it is called taking delivery. It's a good methodology, good strategy to look at 10% gain or 20% gain, a matter of 6 months or 1 year, doesn't matter. I am only against day trading because we are not expert in that. We don't have the technical expertise. We don't have so much of money. Brokers will tell you with 1 lakh, you can take margin up to 5 lakhs and do day trading. So don't fall for it, because once you fall into that, you will never be able to come out of it. But taking delivery is the best.
Thank you. Thank you very much.
Lot of questions are on the current levels and good dividend paying companies. Yes, your good companies are always available. You can look at buying any of the companies where dividend yield is 6%, 7%. Of course, it's all taxable like your interest today, but it's still worth it because capital appreciation can take another 3-4% extra. So you can always look at dividend paying companies. It's a good method to start with.
My name is Rama, sir. Yes. I have a question. I found your presentation very insightful, sir. Thank you. Regarding the analysis, when it comes to analyzing a stock and for investing purposes, for positional investor, so which is more important, sir, technical analysis or fundamental analysis?
It's a good question. Thank you very much for your good word of appreciation. See, this fundamental analysis is very, very good for investor. The fundamental analysis takes into account the company's complete background, the promoter's reputation, the composition of the board, the products, the profitability of the company, how the company has performed during the bad period and good period, what is the dividend policy, and what kind of products they are manufacturing, what their expansion plan, what is their loan position, etc. All these things comprising of fundamental analysis. On the other hand, technical analysis will tell you about day trading, which will help you to buy it low and sell it high and all that. So I don't think we should look at that at all. We should concentrate more into fundamentals.
Thank you.
So those were the questions, sir. And if there is any, we'll post it to you or mail, and we'll take it. If time permits, we can respond it for the same. And we'll put this recordings in our SIRC YouTube channel for public viewing so that they'll be getting better benefit out of it.
Sure.
And when, if possible, you can share us a presentation, so we'll circulate along with the recordings also for the registered part.
Sure.
So, and thank
But
you.
is there any other question now? No.
1 minute, so let me just check. There is one question that how can we evaluate the performance of particular scheme of mutual fund only CAGR? It was already taken, I hope so. And sir, at the current levels, can we invest some good dividend and rightly priced PE like SAIL, REC, IOCL, Coal India, etc.? These are the questions that came up in chat box actually. So you can see it. At the current levels, can we invest in some good dividend and rightly priced PE like SAIL, REC, IOCL, Coal India, etc.?
But I thought I answered that, no?
Okay, then those were the questions. So we can see thanks message only, and maybe audience can post us. So can you please enlighten on bint wealth offerings with low tenure and high interest rate? This is not answered. Can you please enlighten on bint wealth for offering with low tenure and high interest rate? Can you see the question, sir?
Yeah. This the low tenure and higher interest rates always attracts the investors. Now, many people have understood the trick that people have got money. They are not happy with the bank deposit interest rates. They are worried about the fluctuation in the stock market. However, they want to capture their money. So they are coming out with various options. But everything carries risk. You must understand that. Just by saying some interest, are we saying that we are getting a secured interest and principal by giving it to somebody? Any money lent, it becomes unsecured. We are all auditors. We know exactly what is secured and what is unsecured. We need to be extraordinarily cautious before writing a check and giving to somebody. Not that money won't come back. It may come back. It may get dragged. It may get delayed. In a housing finance company like DHFL, can we believe when the fixed deposits, non-convertible debentures were giving good yield, fixed deposit returns were very high. It was considered to be one of the top 3 companies of housing finance in India. Suddenly it fumbled and it got closed. Could anybody do anything? It had AAA rating. All of a sudden it was downgraded. And company is nowhere today. So there is nothing like risk-free investing. Please be extraordinarily cautious. If somebody is offering 1% more than State Bank of India interest rate, think 1 month before you part with your money. It means I'm hungry for money. If I'm hungry for money, I will offer more interest. If I don't want money, I will reduce the interest rate. The psychology should be understood. People don't work for us. People work for themselves. Our good savings should not go to wrong hands, and we should secure ourselves. Our financial independence is what we are looking at by investing in these kind of awareness program. Why I am telling you to put 5,000 and 10,000 month on month on SIP? Because I want financial independence when I retire. I must have 2 crores balance in my account. When I tell this to my fellow chartered accountants, they say, how to build this? Very late, this, that. Nothing is late. Start investing. Tomorrow is first. Invest 5,000, 10,000 for yourself. Then start spending money for others. The determination to save, the conviction to save, and ability to save, all are important for us. Don't look for here and there the new products. Exactly products available, proven products are there. Let us look at this much more. Nothing much to worry about. As far as the LIC is concerned, it is a good company. The government thought they're giving it at a good discount, but somehow or other, the pricing, a lot of people exited after their 30 days, 60 days window. It should stabilize. It's a good company, great company. I don't think you should unduly worry about it. So It's a reputed company in India. So owning it is not a problem at all. Any other questions, please?
No, sir. Those were the questions, sir, and we'll wind up the session. Thank you so much for an interesting session, sir, and a lot of insights. And we look forward to have you in future physical sessions in Brahmaya Hall for meetings. Thank you so much. Thank you so much for.
Thank you very much. I really enjoyed and appreciated. My good wishes to all of you.
Thank you.
Thank you, sir.